Hey guys, welcome to this week's podcast episode for the Financial Freedom Podcast. I'm your host, Dr. Christopher Liu. And as you know, I'm always interested in the five components of freedom: financial, time, location, health freedom, as well as mental freedom. And real estate is one of those traditional asset classes that has the ability to generate massive wealth, create generational wealth for you and your family: time, freedom, location, all types of freedom. And with that, I'm happy to introduce Mike Swenson. He's the founder of REL Freedom, which is also a podcast, and he's helping people achieve time and financial freedom through real estate. He's had several physicians on his podcast, and I'm happy to welcome him to the show. Welcome.
Awesome. Thank you so much for having me on.
Yeah, I know. It's Pond Match is a great service. Tell people about your story and how you got started and what you're doing today.
Yeah, so I am in real estate full time. I've been in real estate full time since 2014. But I really started as a landlord. I tell people kind of a forced landlord back in 2010. So when my wife and I bought our first townhouse right after we got married, I was super excited because it was only 2 years old. The complex was, newly built. And we got the townhouse for a couple $1,000s less than they bought it for brand new. And so I thought, oh, that's a great deal. We had the appraisal done. It had appraised for above that. So we had instant equity. And that's kind of what I knew about real estate at the time. So I was like, a great deal. We got instant equity. And over the next couple years, with the market crash, I watched as the value of our townhouse was cut in half. And most of my neighbors either foreclosed or short sailed and left. And so then I looked up and I was like, well, what are we going to do here? Are we going to, we wanted to start a family. And I was like, are we going to start a family in this townhouse? Because I really thought it was going to be 8 to 10 years before the market recovered. And so I started asking some questions. And so I reached out to my lender and I said, hey, what would it look like if we were to try to rent this out? Like, would we even be able to qualify for another property? How does that work? And so I started to put together some pieces that helped me figure out, okay, we can do this. So what we ended up doing, and then, the last step is before I was going to make this leap, I wanted to find somebody that was going to rent it first. And so my wife had a coworker that was looking for a townhouse. And so we had a lease in place, everything ready to go. We knew what we'd qualify for on the purchase side. And then we bought a short sale because I work construction in college. And so I like being able to fix up a property and be able to put some sweat equity into it. So that was kind of the piece for us that got us over the hump to become landlords ourselves. And then we owned that property from 2010 all the way up until 2022 and sold it. And I had some great experiences as a landlord or as a property manager, as well as landlord. I tell people we had a Elvis impersonator that was in there. And so he had the second bedroom was all full of Elvis costumes that he used. And he was a legit Elvis impersonator. It was really good. And then I had, some great tenants. And so it was a good experience, a good kind of beginning into real estate, beginning into an investment real estate, and then joined a residential real estate team in 2014, started my own team in 2020. And now we work exclusively with investors. A lot of them are out of state investors. I'm located in Minneapolis, St. Paul, Minnesota. And a lot of people, on the coasts love investing in the Midwest because you can get cash flow and appreciation at the same time. So they kind of like that safe, stable Midwestern feel to their investment portfolio. So we help people with short-term, mid-term, long-term rentals, and now even moving into commercial properties with apartment complexes. And then I have my Real Freedom podcast where we talk about highlighting stories of people building wealth, time, and financial freedom through real estate.
It's interesting because, the guest right before you, she was also an accidental landlord and she does like syndications, but it's quite interesting because, you talk to normal people, they think when you say you're a real estate investor, landlordship, right? But there's like so many, you can be a mortgage broker, agent, invest, all these things. But one thing is, if I know this is not advice, and this may not be the best time to get in, given market conditions. But how do people just basically get started in real estate? Is it through home ownership? Tell more.
Yeah, I think the thing that really excites me about working with investors is kind of that I call them kind of first time investors, because on the residential side, we have first time home buyers, and you have to, give them more education, kind of help walk them through because they've never done it before. And so I'm really excited and passionate about helping people that have kind of mental roadblocks, what they think might be financial roadblocks, and people that are just saying like, hey, I could give you 57 different reasons why I shouldn't be a landlord or why I shouldn't get into rental real estate. Because I want to really show people that, yeah, you can get started. There's so many ways to do it. Everybody's path's different. But what ends up happening is people just use, I don't have a money as an excuse, or I don't know enough about real estate as an excuse. So now I'm going to not do it for the next 3 to 5 years. And what you're doing is just pushing that financial freedom, time freedom date back 3-5 years. Uh-huh. And so, what I tell people is, number one, you can start with your own property. And this is why I love my Real Freedom podcast, because I highlight people telling different stories. And so I had a guy that's how he got started, is the property that he lived in. He figured out, okay, I'm going to rent out a bedroom here, bring in some additional income, and use that money to be able to get that next property. And then he had his partner at the time. She also owned a home, and she did that. And then they came together and got married. Well, then you can turn that into a rental property, And so I think start with where you're at. A lot of times people think I've got to have this, bank account of just $100,000 plus just sitting there untouched, ready to go, ready to do it. Well, real estate investing doesn't look like that. It's unlocking money that you have in other areas, or getting started with a snowball with something like this. And so could I rent out something? And it doesn't have to be Airbnb. I had a buddy right out of college that bought a house, and he rented out 3 or 4 of the bedrooms to his old roommates. Well, now he's building up equity. He's getting his mortgage paid for. He's being able to finance the updates on the property. So I think start with where you're at and start small. If you're talking about real estate investing, maybe you've got a friend or family member that wants to invest in real estate as well, and you guys could go in on a property together. People that are interested in Airbnbs, there's a great thing out there, Airbnb arbitrage, where you find somebody that's looking to lease a place, and you essentially come in as like a sublease, and then you can fix up the property, furnish it, and then you can rent it out on Airbnb yourself. Now, you'd have to get your landlord's permission to do that, but it's a way where you don't have to have a ton of money to be able to pour into it. You just have to be able to be willing to kind of think outside the box a little bit and come up with something unique. But that's a great example of furnishing and updating a unit. Now you post it on Airbnb, maybe you rent it out you're paying your landlord, let's call it $1,500, and maybe you make $3,000 a month on Airbnb. Well, that's $1,500 a month that you can now pour into something else, or put it aside to save for a larger investment. And so there's so many opportunities. And then with partnership deals and some of these, real estate syndications, you don't need a ton of money to get started. And so you could actually probably get into a syndication for less than you could to buy a duplex yourself with a 25% down payment. You might need $25,000 or something like that to get started into a syndication. So there's a lot of opportunities. It's sitting down and mapping out what's going to be the best fit for you based on the time you have available, because that's a thing with physicians, right? You don't have a ton of time necessarily available. So you kind of got to figure out how to carve slivers of time to be able to educate yourself, pursue some of these opportunities so that you can start that snowball that's going to grow.
Yeah. And it's really interesting because, like I said, there's so many different avenues. You can go the active route, you can go, and then you can transition into passive route, or you can, go directly into passive. I think what you're highlighting is there's so many different ways of getting started. The main thing is, getting started. Talk a little bit about if, because a lot of the listeners out there, they're physicians, they're doctors, they have their homes, they may have some properties, but they're sick and tired of, tenants, toilets, and trash and phone calls. And how do they transition from active to passive?
Yeah, one of the things that I talk about that's helpful for people to think about is think about a 3-sided triangle. And on each side, you've got 3 things: time, money, and expertise. And so what you want to do is you want to look at kind of, what do I have in that triangle? And then find somebody to leverage the other pieces of that triangle. So what I tell people is, for me, because I work with real estate investors full time, I'm analyzing deals all the time. I'm looking at opportunities. I'm good at expertise, right? Like I think I can do a pretty good job of that because I'm in real estate. I have time available. That doesn't mean I'm going to devote all of my time to like managing a property, but I also know great property managers that could help leverage my time, right? And then the money side, I have money, but if I want to scale to a higher degree, that's kind of the piece that I'm looking for. Somebody who's a physician, right? You might have the money piece figured out. You may not have the time and you may not have the expertise. So it's really kind of finding, and that doesn't mean like you can't have multiple business partners or pursue multiple opportunities. It's not like you're just locking arms with this one person till the day you die. But think about like, what do I have to offer and what is it that I'm missing that I can go find somebody that could be a good fit? Because I believe partnering with other people is a great way to do that. And so, so for a physician, it's okay, how do I find people that can meet those needs that I don't think I can meet right now, which probably falls somewhere in the time piece and somewhere in the expertise piece, and then go find people that can do that. And yeah, if you're somebody looking for expertise and time, feel free to reach out to me. That's, if not me, I love consulting people and helping them fulfill their investment goals. And so it could be, hey, I've always thought about a short-term rental. Like, what does that look like? Well, you can find somebody, if not me, find somebody that does do short-term rentals and does do short-term rentals in your area and could provide some expertise. But I think that the active passive piece is really important because, yeah, you said it. A lot of people don't want to be active investors. They want to be passive. Well, when we're analyzing properties, a lot of our deal calculators that we use, we fill in an amount for a property manager because even if you want to be an active, even if you want to manage the property now, as you scale, you want to think about the end in mind. You probably don't want to be a property manager when you have 100 units, right? And so at some point, you're going to have to hire a property manager. So you want to make sure that your deal is going to make sense to be able to financially hire a property manager down the road. So you want to think ahead a couple steps. So a lot of people, yeah, when I get started as a way to kind of maximize that bottom line, I'll be the property manager myself. But if you're going to want to hire it in the future, you need to make sure the deal isn't skinny enough that you couldn't hire a property manager. And I agree 100%. As a real estate agent, being in investment properties full time, managing a property is the last thing that I want to do in terms of tenants, the toilets, and all that kind of stuff. And so that's why I find good property managers, right? Just like my kind of time, money, expertise triangle, I'm looking for a property manager that's a good fit for me and the properties that we have and the properties that our investors have that can leverage the time, the investors that we work with. So it's really about, yeah, if you don't want to do it, don't do it, but take your time then and go find a good property manager that can do it for you because they're worth their weight in gold.
Yeah. Yeah, it's all about leveraging your time and from your energy. There's two real big things for the audience, and the first thing is that you work with physicians as well, and what sort of barriers do you see in physicians in becoming an investor, and what sort of patterns and traits that are different from traditional real estate investors?
Yeah, I think the physicians that I talk to, or even the people that I've had on the podcast, a lot of them it's thinking about what is life going to be like 10, 15, 20 years from now. Physicians, in general make good money, so we want to think about how do I allow that money to be able to make me more money in the future versus having to insert myself into my practice to make money, right? Like, what if you could make the same amount of money without ever having to show up for work? And so that's the hard thing. And it's like planting a tree. It takes time for those seedlings to grow. So if you're somebody right now that's a physician and you want to be financially free from your day job, right? You want to think about, okay, what if I pick up some investment properties that start bringing in some cash flow? Because like an apartment complex, doesn't bring in a ton of cash flow right away. It takes time. Short-term rentals can bring a little bit more. If you buy the right one and you market it well, you can make more cash flow in the short term. But to replace your income as a physician, it's going to take a little bit of time to do that. So you want to start kind of sowing some seeds now so that, 5, 10, 20 years from now, you've got enough income coming in where you can pick your spots a lot more and free up your time. So that's why I'm so passionate, not only, like I said, the financial freedom, but the time freedom, which is where I think a lot of physicians that I've talked to struggle with is the time freedom, because I'm so busy with my job. And then I've got family and interests and all that other stuff that I'm doing. I got to figure out a way to kind of get out of that and get the time freedom to be able to then produce the financial freedom down the road.
Like I said, the last guest we were talking, and what do you see with the current trends in the real estate market, especially people say it's a great time to buy, and then I'm my personal thoughts is it's very challenging. You have to be very strategic. You have to be able to pivot. What are your thoughts?
Yeah, so the interest rates are certainly higher than where they were a year ago and 2 years ago. The good news with that is, as we run financial deal calculators on all of our investments, doing our due diligence. So, if you can get something to pencil, because once again, kind of Midwest, I mentioned we're going for cash flow and appreciation, where, yeah, if you're looking in California, you may not be able to find the cash flow. The appreciation is great. So we're looking at how do we get a deal to cash flow and then also enjoy that appreciation. Well, if you can get it to cash flow right now at the interest rates and what they are, then when the rates do go down in the future and you have an opportunity to refinance, now that's going to make things a lot better for you. So I think the good news now is, you're buying at a time where the money is more expensive than it will be in the future. Now, we don't know how long that's going to be. It might be a year, it might be 2 years from now. To get back to kind of the 2% to 3% rates, it may take a few more years. But if you can get it to pencil in right now from a cash flow perspective, then you'll be able to take advantage of that financial future when the rates do drop down. And so, you definitely don't want to buy something right now that's not going to pencil for cash flow. So we need to be a little bit more conservative. We need to kind of pick our spots, but there's still deals to be had out there. And what we're seeing is the longer that interest rates stay high, the more pressure that puts on the price, right? Because even 6 months ago, rates jump up, the sellers look up and they say, hey, well, so-and-so sold it for sold this comp down the road for this a month or two before, so I'm going to hold firm on the price. And what people are seeing now is there's a lot of people just not buying. And so now that starts to put that downward pressure on the price, where people are like, hey, if I do want to sell this, I need to sell it for less than maybe what I thought I could 6 months ago, or what my neighbor sold it for 6 months from now. So there is a little bit of that softening happening, where sellers are waking up saying, well, if I actually want it to sell, because a year ago, even as we would do inspections on properties, there's stuff that comes up. I always encourage my buyers, we really want to hammer stuff that presents safety issues or like structural issues. And so when an inspection would come up, a seller, I would often phrase it like, well, because of safety or because of the structure, here's what we're looking for concessions as a result of an inspection. And a lot of times the seller's just like, kick rocks. I got 5 other people that are going to buy this thing if you don't want it, right? So we didn't have as much leverage or negotiating power with the seller. But now that the market's softening up a little bit, we do have some more negotiating leverage. So if you find those deals that can pencil on paper, you have a little bit more leverage and negotiating room with sellers to pick up a property that, yeah, you hold it now, the numbers make sense. Down the road, as the rates start to creep down, you find that time where strategically it makes sense to refinance, and now you're in a much better cash flow situation.
Yeah, it's really in what particular asset classes? Because particularly I'm really curious about commercial. With there's this dilemma, because you have the high rates and you have these commercial office buildings vacant because of work from home, and then if they try to refinance, they're paying more. And so, given that situation, I see commercial real estate taking a dip. But what
I would agree with you. So yeah, I should clarify my previous comments. The commercial that we do is commercial residential, because it's kind of the apartment complexes. We've got a housing shortage. I'm with you there on the commercial office space side, because I kind of look up too. Even a few years ago, when I was looking at commercial space, office space for my previous company, we went and looked at some office space, and then we signed, I think it was maybe a 12 or an 18-month lease with a short-term opportunity there. And then we came back and looked again, and it was like the same places were still available. And that was right before COVID hit, before all the work from home stuff happened. So yeah, a lot of my, friends and acquaintances, I hear them, they're like, yeah, we show up for work one day a week and there's nobody there, for some of these large companies. So I think that, the office space, there's going to be a lot more pressure there. And I think a great opportunity is if we can do that, convert office space into residential space, because we have such a housing shortage right now, in terms of, units that we need to be building to keep up with the supply. And we're going to have, these people that enjoy working from home. I enjoy working from home. That's where I am right now. I think we'll continue to see that pressure on the commercial space. And I think, yeah, a great opportunity is how do we find a way to turn that into residential and kind of work with that housing shortage at the same time. But I agree, commercial is a spot, which is why I'm not focusing on it as much right now, because I don't know where it's going to land.
Yeah, it's like it's just basically you see the storm coming, and it's just but then there's other asset classes. There's like a multifamily apartment, there's self-storage, car washes, I heard, which is interesting. So there's just, there's like pockets, and you have to be more strategic and selective, like you said.
That's why our investors were focusing on the multifamily commercial side, because I do feel like there's a great opportunity there.
Yeah. If people want to follow you, check your podcast out, reach out to you on social media, how can they do that?
Yeah. So our podcast, it's Real Freedom, but it's spelled REL, which stands for Real Estate Leveraged Freedom. That's the REL, how it came to be. And so if you go to relfreedom.com, you can see there we've got our episodes of our podcast. And then I have more and more content on real estate investing, how to get started, how to overcome barriers, all sorts of options. Like we said, all those different asset classes. I've worked with a lot of them, not all of them, but I help investors find deals that fit. And I kind of say I'm an investor matchmaker, based on your preferences, based on your time available, and based on what you're really wanting to move forward with, we'll find something that's a good fit for you that meets your goals. And so and I always tell people I'm in Minnesota, but at the same time, I love talking to people and helping people overcome those barriers to get started. So feel free to reach out to me. Let me know if, hey, I've got this question, or I don't really know how to get started. What steps can I take? Because everybody's situation is different. So reach out to me. But yeah, realfreedom.com, relfreedom.com. Start a conversation, and happy to help any way I can.
Yeah. And for all the audience out there, let's thank Mike for very engaging, enlightening conversation. Like I said, real estate is one of the best ways to build wealth, one of the top 2 in my playbook. And all of his resources will be in the links and show notes. Be sure to check him out. And with that, thanks so much for coming onto the podcast.
Awesome. Thank you so much for having me. I appreciate the opportunity.